Yeah, good evening, sports fans. We're going to start with multiple time frames, trading with multiple time frames. Here we are on the right-hand side. What we're doing, let me find my mouse, my wonderful, there we go. This is the last 3 days. You can see the market has sold off fairly hard. We're off about 4.5%. We're down here. This is where we're going to open. We're going to open at the retest failure, okay, the low of April 18th. If you take from this low back on March 16th to the high, this is a perfect 60%. This is what we call a tenet number 3 buy. Okay, now I'm going to jump to, so this is a tenet number 3 buy. This is where you sort of bet the ranch if you can. I hesitate a little bit, but I put out a little too late, but I want to show you what happens. Now, here's the 5-minute chart. Here's the gap down. This is right into the retest failure of 418 and the 60% of 316. I'm telling you the calls are open. In the room at 9:15, I tell them we want to look at calls, but I'm going to wait for the market to stabilize. I didn't put out an alert. Look at this. And that's stable. Boom, straight up the page. Then I put out an alert in here, hoping we'd come down, looking to buy the calls near $1 and scale in lower. Market never came down. I think I got down to $1.30. Anyway, 1 hour later, a little later, we go out and hit a T2. If you take, I'll just show you quickly. We do a here. Take the low, take the high, take this. There's a T2. There's a target number 2. Here's a 60. Here's a 100% return. Here's the T3. But right now we're looking at the T2. That gave you the target number 1307. The calls go to 230. They opened at 30 cents. If we were brave enough and bullish enough to bid, we would own them at 30 cents on the opening, let's say 35. They're 230. One student in the room bought them, made $1.90. He caught them well and had to leave and go swimming with the family. Anyway, now when this is rallying, this is starting to rally, I'm putting out an alert to buy the 580 weeklies near $1. Okay, we're going to scale in. The ADs go from minus 10 to 1. I mean 1 to 10. Minus, for every 10 stocks down, there's 1 up. Okay, now we're 1 to 3, so it's a little better. Okay, but we're looking to buy puts. All right, sell any calls. We missed the puts. They hit 230. All right, now we're coming along. Bum, bum, bum. These are all hedges. You know, we're starting to buy the puts. Okay, hedge. Go long. There's a $125 profit. Here's a $100 profit. So all of a sudden, you know, when you realize, you know, and then you take half of this, because we're hedging roughly 50%. So you just made $200, you made $100. Well, if you're buying the options at 80 cents, you paid for them in 2 trades. Here, you buy this one, come down here. Now I'm starting to put an uptrend line in here. See where we're going. I'm going to go across here. Sort of a rising wedge. We want to see where we can go, even though we sold the calls. They're just not going to go anywhere. Even if the market goes higher in here, calls are probably not going to sell much because it's going to be losing premium in here. Anyway, there's another hedge. Now, these puts are 80 cents. Market hits it up. We start an uptrend line. I sell a few. $2, double your money. Meanwhile, you're hedging. Here's a $175 hedge. So now you can see you start making $400. That's $200. Hey, you bought them at 80 cents. You're making serious money now. Now they hit 55. Okay, you made some money. Buy some more. Average in. That's what we're doing. Meanwhile, the market is getting jammed. Market's starting to work its way higher. Okay, now we hit this big 60. Okay, 60 from the high of the previous day, Thursday, to the low of this is 60% retracement. And notice we're jammed. This normally, oh, something happened here. This disappeared. We have an orbital. See, we started to take out the highs, getting a little bullish. Just a little bullish on the short term. See, this is now we're going to talk about multi-time frames, trading multi-time frames. See, this looks fantastic. We're jammed, oversold, jammed. This is really, really starting to become a little power. Okay, opening range breakout. We take the opening range highs out. Okay, now it looks like we may be going. Look, another $100. God, guys, this is $150, $200 per option, for 80-cent option. This is getting to be fun if you're long puts. Okay, meanwhile, here, look at this. I'm trying to buy size, humongous size. I'm bidding, I tell the room, I'm bidding for multiple hundreds of puts up in here. I'm trying to buy them 40 down. Okay, unfortunately, they don't stay up there that high, but I'm bidding for them. Now I want to show you another multiple time frame. This is the 30-minute chart. Look what's happening. Here's the low. See the daily chart. This is the big buy level. We're jammed. Okay, look at this. Oscillator intrabar hit 62. Jam 62. Trend down. We sell 62s from jams. So look at where we are. Here's the support line. Okay, guess what happens? I go across the bodies. Support becomes resistance. Look at that, guys. Look at that. It just popped its head up a little bit in the body. And what are we doing? It's jammed. 62, 62 jammed. Look at this. We sold this 62 up here. Boom, look at this gap down here. Okay, so now you're starting to see the bigger chart. The daily chart confirmed the buy down here. The 30-minute chart is telling you support becomes resistance, short the hell. That's why I'm trying to buy size on the puts. Okay, so now let's see what happens. We have this one uptrend. I'm still trying to buy size because I figure we're going to come down. Don't know how far, but I know we're going to come down. So we're rolling along, rolling along, rolling along. See the 30-minute chart, the up's over. This is now support, Orbo support. We break out, this is support. Okay, now on the 5-minute chart, this looks sensational. I'm even long some S&Ps in here. Okay, against my puts. Okay, look, we can't make a high. Now we're starting to go down to 4. Okay, we're back to support. Okay, buy some more S&Ps. All right, I'm sort of dying now because I got a lot of S&Ps. I'm 50% hedged. And look at this. We can't start to sell. We can't get back over this. Now it's confirmed. Okay, now it's confirmed. Boom, there it is. Broke the uptrend line. Right there. Look at that bar. Broke that. Everybody sees that break of the trend. And we can't get back over. Remember, support. Can't get over it. So we already knew in here. We already knew in here that we were having trouble. We should have gone back shallow and taken out the highs if we're strong. But the 30-minute chart told us we were weak. We were weak. Okay, so we're continuing. We're buying. We bought our puts. And now guess what? A little hedge there. $25. You can see it starting to break down. Starting to break down. This is now, see, oversold. Trying to get it. Can't even lift. Can't even lift. Okay. Now here, the puts are starting to come down. I send out an alert. Start selling the puts in the weakness. We broke the uptrend line. Okay, when we broke this, I sent out start selling the puts in the strength. Okay, strength being weakness when market's going down. See, hits 2, sell a few, scale out. Alert now telling you to sell the puts in the weakness. Okay, look at this. We start falling off the page. See, underneath the moving average, the mid moving average. Can't get back. Look how weak. We can't even rally. Oscillator can't even get back to 62 from jam. Intrabar it might get back, okay? Now here we get another shot. At 3:30, okay, 3:30, end of day, they try to reverse them. So we're retesting this low. We're almost down here. We look at 80s and 100s to buy in trading ranges. 80s and 100s, we take profits at 60s. Okay, so we're retesting the low, got an end of day move, puts it 240, we're gone. I sold some as high as 240. Bought some at a lot as low as 30 cents. Okay? Wish I handled my hedges better. Okay, 62. Jam 62. What do? We sell. If you hedge that, let's say you decide to keep your puts. You hedge that. You just paid for your puts 3 times over. Okay, look at that. I'm sorry, I take that back. That's 7 times over, guys. I'm sorry, 100. No, 3 times over, $100. You made half. But these are in the money now. You can go short 75% of this. Okay, we're down 5 weeks in a row. Worst outperformance since 04. Oil flat, gold up $10. So this is what's happening now. It's over. So once we broke, you saw the 30-minute chart. Tell us, this was a breakout. Very strong on the 5-minute chart. Very, very strong on the 5-minute chart. Okay? But not on the 30-minute. Support becomes resistance. We can see it failing. We should have been making new highs. This should have been making new highs. Outsiders should have been continuing jams. It fails. It goes down. Rallies back. Never crosses the mid-unit. 62. Hit that. Okay? Meanwhile, he ran out of the puts. Now, the puts come back down to 250. But they're running out of time, and the premium is going to disappear. You can see this was a tenant number 3 buy at the multi-month level. Jobs number sucks. Puts, you know. But we know we got down low enough, see? Puts the market back to the April lows and support. And we did that ABC swing, got everything, hit the targets. Okay, went a little higher. Look at this, guys. Look at this. Let me go back just a tick here. If averaging in with increasing size lower, you caught almost a 5-bagger return before adding another $200 plus per hedge profits on a 50-cent put. That's 9 times your money, guys. 9, and if you bought it here, 8 times your money. Plus you got a couple hedges in here, not a lot of money. Guys, but the whole trade was set up on the daily for the buy, the 30-minute for the sell, and the market just tanked. Have a great day, and thank you for your attention.